What's up, traders? John Howell here, and welcome to another edition of Ask John. And this video, obviously from the title, is all about, and the title of this email is trading too much and not being patient enough. So anyway, guys, so today's email is obviously I'll keep his name silent, but today's email is, it says, "Hi John, I want to know, how do you not overtrade? I find that I'm having problems trading too much and the greed's getting too much involved, and I am having problems trading too much. If you can please help me with this would be great." Fantastic. Alright, cool. So, let's get straight into today's video.
Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
Alright guys, so let's get straight into today's video. Let's actually talk about exactly what we need to do moving forward here about over trading. Okay, and we all know about that. Over trading, OT equal, and obviously greed will destroy chances. And trust me guys, sometimes when I'm going through this, I'm going to pull myself back. Okay, now here's what I do when I'm trading. Okay, the first thing is that if you're trading, say the E-mini S&P or the Forex, you definitely need to understand this more and more. But if you're trading, say the E-mini or the Forex, then you definitely need that. Or even if you're trading those, and especially if you're trading the interval trade or the interval time frame, such as the 15-minute, 5-minute, you definitely need to focus on this. Okay. So if you're doing that, if you're trading E-mini, S&P or Forex on a small time frame chart, then what's important for you to do is what you need to do is you need to find exactly what you're looking for and have a screenshot, and put that screenshot of the exact setup that you have and print it out, the perfect setup. Okay, and the perfect setup, have that perfect setup and put it on your wall behind your computer. Make sense? So that's the first thing I do say. Second thing I do say is that make sure, before I say that, make sure that you know your system works. Do some back testing, do some live paper trading, and when you're trading live, if you know it works, then it's only you, right? It's you from over trading and so on and so forth. So print it out and put it on the wall, say, this is exactly what I'm looking for. And what you want to do, especially when you're trading those interval charts, you want to sit and wait and wait and wait and wait until you get the right setups, right? And sometimes, guys, that means waiting a long time. You know what I mean? Like, I used to moderate a trading room, trading the E-mini S&P 500, and I used to sometimes wait 3, 4, 5 hours because I was trading the smaller time frame chart. And I used to wait 3, 4, 5 hours for one trade. But guess what? If I looked at my trading over entire career of me trading the E-mini S&P, was very successful because I was willing to wait and say, no, that's not it, that's not it, that's not it. And you've got to get out of this mind that just because the market's moving doesn't mean you're missing out. And that's for another video. But you've got to stop thinking, oh, the market's moving, oh, the market's running up, oh, the market's dropping, oh, I need to get in, oh, I do this. You don't, okay? Because that sort of attitude is going to get you kicked in the guts, alright? So you've got to be happy sitting back and waiting. You are paid to wait. Because put it this way, right? And I noticed it so many times when I was doing moderating years and years and years ago, doing an E-mini. And there might have been, just say for example, there might have been, say, 10 potentials. Okay, 10 potentials. And I'd have all the a lot of the clients would take all the 10, and because they're trading the 10, guess what they're doing now? They're trading a lot, right? They're trading a lot. That 10 might be in a couple of hours. Now what's happening? Now you're making a lot of mistakes, right? Because you're getting in, you're getting out, you're feeling the pressure. Because trading, mate, doesn't matter who you are, right? You're never going to feel that. You're never going to stop feeling that emotional connection to the markets, right? Especially when you're trading live. So they will take 10 trades, and because they weren't waiting for, there'll be 10 potentials, and out of those, I'd only call, say, 2, right? And that, again, that might be in a 4 or 5 hour period, but because you're trading a lot that many times, one, you're going to start making a lot of mistakes because you've got to be 100% focused on what you're doing properly, but also, secondly, because you're not patient, and because you're not saying, you know what, because you're not patient, and because you're not saying, you know what, I'm going to wait for that perfect setup, you start taking trades that are losers, or you start taking trades that are not perfect, and then when you start taking those trades that are not perfect, then it has a compounding effect to say, you know what, maybe this doesn't work, and maybe this is not right for me, and blah 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 blah, and suddenly you take the trades that you should have taken, and when the really good setups do come around, you don't take those because you've already had 2 or 3 losing trades, and you're doing it in your fear of losing more money, and suddenly those setups make good money. Have you ever been there before? Right? So this is something that I want to really bring down to you and bring home to you, that's, you know, you got to put yourself in a mind frame. See, so many people are thinking, oh my goodness, here's a good setup, I need to take it right now. No, you've got to be in the right mind frame. The right mind frame to say, you know what, I know there's a really good trade just around the corner, and I'm prepared to wait for that. Because here's the thing, if you want a high, like right now I'm getting over a 90% success rate, if you want to get over a 90% success rate, then guess what you've got to do? You've got to wait for the right setups. Okay, wait for the right setups. So that's for if you're trading an interval time frame chart. Wait, patience. You know, and if you're trading interval time frame, you must be prepared. Be prepared to sit in front of the screen for as long as you do it, maybe 4, 5, 6 hours, and be prepared to not take any trades. One of my mentors right now, he trades $1 million every single time he trades. He trades the E-minis, such as the E-mini S&P 500, the DAX, so on and so forth. That's what he trades. But guess what? He sits there, and sometimes he sits there for 8 hours and not take any trade during the day. Makes sense? So that's what he does, and he has like a 97% success rate. It's crazy. It's like, it's awesome. But guess what? When you start taking that 90% success rate and you stop taking those trades you know you shouldn't, and having the belief and the faith that yes, there's another good trade, there's a really good trade just around the corner, and you start taking the really good trades, and your win-loss ratio is much higher, guess what you're likely to do now? You're now likely to put more money on the trade, and now you put more money on the trade. Now because you put more money on the trade, now you can actually trade less and make more, and have less stress. Make sense? So whenever you're trading, have a think about that. Okay, have a think about when you're trading and when you're trying to move forward in the markets. Have a think about getting that win-loss ratio up. Okay, and have a good win-loss ratio. Now, yes, some of the most successful traders on the planet have less than 50-50 win-loss ratio. That is true. But for me personally, I've always found that I need to wait. Okay, I need to wait. And so over trading is only a state of mind because you think in that moment this is the best there is, or the market's moving so I'm missing out, and that is simply not true. Okay, so that's what you say about E-minis and Forex. Now if you're trading stocks like me and obviously some of my private clients, if you're trading that, then what I want you to do is once again, I simply want you to do the exact same thing, but only set your time limit to say maybe an hour to 2 hours maximum per day on the markets. Make sense? So over trading, once again, over trading, even on the stock market, I trade the daily chart, even on the stock market, you've got to say, you know what, there's a good trade coming around just around the corner. And sometimes guys, sometimes I wait 2, 3, sometimes 4 weeks without no trades, and suddenly boom, there'll be trades coming through. I'll give you an example. There was a period this year, as I'm doing this recording for you, that I was about 3 to 4 weeks of 0 trades. 0 trades. I had no trades for almost a month. And even I was starting to get a bit itchy, right? Because I'm a trader, I'm an active guy, I like to get in, have, you know, and do it. So even I'm an active trader. So what I did is, yeah, I just stuck to the rules and no, I'm waiting for the right setup. I know it will come, right? And then guess what? On the 5th week, I had 8 trades. 8 trades. And all of them were winners. They were ranging anywhere from say 15% profit up to about a 70 or 80% profit, somewhere around there. Alright, 80% profit. Now, let me ask you a question. If you were at a stage in life where you're very happy putting, say, even, say 10 grand, I put a lot more money than that on it, but just say even 10 grand. If you put on $10,000, right? Actually, no, forget the $10,000. Just let's go as low as even $1,000. Okay, let's do the numbers here. Right, let's do the numbers here. And I want to show you this, and I want to do some numbers here, and I might get the math wrong, but I'm trying to demonstrate, and I'm trying to show you exactly what you need to think about here. Okay, so I took no trades for 4 weeks, and then the next week I took 8 trades, all wins. Okay, so let's just say the first trade here was a 15% return. Okay, and let's just say I was trading $1,000. All right, this one here is $150. Okay, the second one here, let's call that a 20% return. Third one, let's call that I forget the exact numbers, but let's just call that again. Let's just call that a 30% return. The fourth one, let's call that a 20% return. The fifth one, let's call that and again, you probably see what I'm saying here, right? The fourth one, again, there was 8 trades, and I forget exactly, but I know there was fifth, that was about a 40% return. I know I did a 40% return there. 6, there was, let's call that even just a 10% return, you know, just to keep the numbers low. Number 7 and number 8, this one here got a 60% return, and this one here got an 80% return. Can you see that? Alright, so you with me so far? So let's just do this here. Alright, cool. So let's do the numbers here, right? This one here, based on a $1,000 trade, this one here made $200. This one here made $300. This one here $200. This one here $400. This one here $100. This one here $600. This one here $800. So by looking at that, we've got what? We've got 8, so it's 2,000. There's roughly $2,500, $3,000 there. Okay, $2,500, $3,000. Let's call it $2,500. Take away. Let's just say we take away a bit of brokerage for that. Okay, take away a bit of brokerage for that, and let's just say, you know, we're left with, say, $2,000 profit. Okay, $2,000 profit. Are you with me so far? Alright, cool. So this is exactly what happened. Now the thing is this, guys, the thing is this, is that when I was doing that, that's just based on $1,000. Okay, it's based on $1,000 each trade. Now let's just say, for example, over a 6-month period or a 12-month period, you knew your system, you did your back testing, you did your research, you did your live paper trading, you did, you know, and you're patient and you're waiting and stuff like that, and now your success rate's going up and you're confident to put more money on. Now what happens is this, guys. What happens if you start putting $5,000 on here? Well, it's just the numbers game, right? The numbers don't change, it's just more money per trade. Well, that's times this by 5. And what do you have now? Just based on a $5,000 investment per trade, that is. Obviously $5,000 per trade, making sure you've got your risk management and so on and so forth in there. What is that now? 2 times 5 equals, I'm pretty sure it's 10. Alright, so now you've got 10K. Makes sense? So that $5,000 made $10,000 in a 5-week period. But for the 4 weeks, I was not trading at all. Now again, I was trading a lot more than 5,000, just say even 10,000. Again, I was trading a lot more than $10,000 per trade, but I'm trying to keep the number simple here for you, okay? I'm trying to keep the number simple here for you. So let's say I was even doing, obviously say $10,000 per trade. Then what do we have now? We now have a $20,000 return. Are you with me so far? So here's what I'm trying to get out here, okay? You are paid to wait. And if you want to start expanding your profitability, then mate, you've got to understand that you've got to put yourself in a situation, especially trading stocks or any market out there, that it's not trading a lot that's going to make you money. Okay, that's for the institutional investor computer machines, okay? It's not trading a lot. It's trading the right amount. It's trading the right setup, and willing to be wait and patient and say, no, this is not it. No, that's not it. That's not it. That's not it. Boom. This is it. Makes sense? And it's one of the things I learned from my mentor. It's like, nah, not it. Nah, next. Ah, there it is. You trade it, and it generally does well. Makes sense? And now you start to go up through the ranks. Make sure you start to go up through the ranks. And what happens, guys, is this, is that, especially for me on the daily chart, I know there's 52 weeks in a year. 52 weeks in a year. So 52 weeks in a year, if I divide by that by 2, I'm left with about 26. Okay, 26. If I only get one trade per week for half the year, on average, and I stick to my plan overall, and I'm getting a 90% success rate, guess what? I'm making a lot of money. Do you see what I'm saying there? So it's not you trading a lot. That's not how you get ahead in the markets. It's you being patient and saying that. And as I said before, and I know where I'm at right now. So look at that. Look, step back a bit now and look at that from afar. Okay, there's 52 weeks in a year. 26. All I need really is 26 really good trades. 26 really good trades for the whole year. Now I trade a bit more than that, but you know, all I need is 26 trades, 26 good trades for the whole year that produce really good win-loss ratio, that I'm patient, that I wait, that I listen to my gut, that I focus on the charts and I do everything properly and I don't rush and I get my high win-loss ratio. Guess what? Now you're starting to talk, you know, a good amount of money. And again, guys, 26 trades might not seem like much, but again, you don't need to trade a lot to do really well, right? What if you started putting $20,000 on there? What if you started putting $30,000 on per trade? Because you know your success rate. This is how you go up in the ranks, right? You start down here and maybe just trading, say, $100 per trade, and you get better, and then suddenly you bump it up to $1,000 per trade, and then you jump it up to $10,000 per trade, you know, and then you can just keep bumping it up, and then suddenly you're at $40,000 per trade, because you know your win-loss ratio, and you're very happy with also the risk. You're not putting too much risk on your account because you don't know which trade is going to make money, which trade is not. And you see what I'm saying there? And so that's how you start to move forward. That's how you actually start to really pick up and start to do well in the markets. So if you're interval trading on Forex, this same applies for you, okay? And as I said before, I know my success rate, and I don't need a lot of trades. And that's one thing I learned from my earliest mentors. It was a multi-millionaire mentor trader, and he always kept saying to me, don't trade a lot, don't trade a lot. Listen to that gut and say, you know your system, you know your rules, you've done your back testing, wait for that, you know exactly what you're looking for. You know exactly what you're looking for, and just wait for that aha moment. Make sense? So, and that will help you. That will help you when trying to trade the market. So, anyway, guys, this is how you overcome overtrading and greed in the markets. I hope this helped you out, guys. If you did, give us a like, give us a share it out. And anyway, guys, this is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.